All right, let's begin the show then. And as promised, put the spotlight on ChrysCapital. It's India's leading private equity platform and it has the largest track record of investing in the country. They've celebrated over 25 years of investing and has raised over $5 billion to date across 9 funds. They've recently as well closed a $700 million continuation fund. So we want to understand what the outlook is when it comes to individual sectors and themes and what's looking promising when it comes to the India story. Sanjay Kukreja, partner and CIO at ChrysCapital, now joins in. Thank you so much for taking time out. And I'm just going to get in a sense from you as to what the PE and VC landscape is looking like in the country right now. What does the India opportunity look like?
Sure, and thank you for having me. Always a pleasure. Um, I do see the Indian private equity landscape mature quite a bit. We've spoken about it in the past, and what we've seen now is, several decades. ChrysCapital, actually, we just completed our 25th year. And so what that means is there have been, enough time for cycles to play out, learnings to get assimilated in the investment process. And it's not just for me, I see it for other firms. The people who are investing today have lived through cycles. And so the private equity landscape actually has matured quite a bit. It's consolidated. There are fewer players. And of course, the big, elephant in the room has been global, firms from the rest of the world coming in and taking a big share of the market in India, and actually being quite successful in doing that as well. So I would say those have been, the changes in the people who are playing. And in terms of deals, of course, the trend has been towards more controlled deals, sustainably so in the last, 2 decades. For us, it was less than 10% control deals in the first decade, and then we moved almost to a third of our deals in our current fund. Majority of the deals are actually control deals. So that's clearly a trend that we are seeing in the moving towards control deals clearly.
And let's also touch upon the latest close of the $700 million continuation fund. And I believe there was an investment in NSE that you had first invested here in the year 2016. Can you tell us a little bit more about what being a long-term shareholder here means and the latest details on the fund?
Sure. So, obviously NSE has been a very successful investment for us. We made this in Fund 6. It was the last remaining investment in Fund 6 that was yet to be monetized. Fund 6 is a 2012 vintage fund, had played out its course of, its investment period. We'd extended it for a little bit and it was over that as well. And so we decided to, not exit the investment fully from our perspective, but roll into a new vehicle. It's called a continuation vehicle. We got a very strong demand globally from wealth of institutions, family offices, some of the best funds globally. And obviously the option was given to existing investors as well to roll over into this vehicle. But essentially we were very convinced on the roadmap, future value creation. Even from this point on, it's already been a very substantial, over 6 times the return being realized in this investment. But we continue to believe that the runway for future appreciation is actually pretty strong in NSE, and wanted to continue to be owners of this great asset. And so we found the continuation vehicle the best way to do that. It provides us for continuing the ability to hold this for another 5 years, and which provides sufficient window to, we believe that, in that time frame, the company should be able to find ways to go public. And also, even regardless of that, I think there's enough opportunity for value creation in the business as well. And so I think the combination of the two provided a very good opportunity for us to continue to stay invested and grow. And at the same time, created opportunity for global investors who may not have earlier come in Fund 6, but also to come in and take advantage of this macro trend towards, savings being institutionalized in India through equities, and the whole trend around more equity culture coming in, and therefore appreciation of the underlying asset as well.
Sure, and there have been a number of big financials as well that have been strategic exits, the likes of Axis Bank, Federal Bank, Yes Bank, for instance. What's the outlook on how financials are poised in the current environment, and how are you looking at this sector?
So financial services is one of, 3 or 4 sectors that ChrysCapital is like deeply focused in, right? IT services, enterprise tech, consumer financial services, pharma, healthcare. These are our core sectors. So we've been investing in it for a long, long period of time. We, continue to be very optimistic on financial services in the country. There is basically a play on financial inclusion. There's a play on sort of just runway for financial services companies to continue building coverage, whether it's health insurance, whether it's NBFCs, various segments, even sort of asset ownership, asset AMCs, wealth management companies, etc. These are all sort of segments that we really like and feel like there is a long runway for continued growth over the next decade or even longer. And in the course of that, we also find great talent. We find great management teams and the ability to kind of continue to accrete and create value. So we're very optimistic on that. I think valuations keep running up and down, and you have to take that as part and parcel. And that has been a constant challenge in India. But I think if you focus on quality in general and quality of assets, our experience has been that picking the best, better quality, better business quality, as well as better management quality ends up resulting in, outsized returns over longer period of time.
So Sanjay, I can't help but noticing that there are a number of names as well from the new economy that ChrysCap has invested in, be it Dream11, First Cry, Express Bees, etc. How are some of these companies poised in terms of their journey? If you could tell us a little bit about the investment rationale and what the outlook is when it comes to some of these companies even going public.
Right. I think new economy, obviously there's a lot of activity, a lot of entrepreneurial talent in India that's getting energized, and the opportunity for scale has also improved quite a bit. Back 15-20 years ago, it used to take a long time for companies to scale to 10 million or 20 million even, and now I think 100 million, 0 to 100 million is also reasonably quickly possible in India, which was not the case earlier. I think that opportunity for wealth creation is actually pretty strong. The challenge, of course, is that not everybody is able to do it, and I think there's a big fall ratio between the number of people who start out and the ones who actually end up accomplishing, the scale up to build, to go on to become unicorns, etc. And so our strategy in this sector has been to look at later stage companies that have, already reached profitability, are leaders in their spaces, right? So basically essentially what we are saying is that we are willing to wait it out and let companies position themselves as leadership, take leadership positions in various sectors, and then invest in them for their scale up capital further. We understand that doing so may result in valuations being a bit high, but I think that's a risk we're willing to take relative to taking business risk and unit economics risks in investing in some businesses early on, where the unit economics could change in the future. So we want to play a later part in that cycle, not come in earlier. And I think that segment is still sort of playing out really well. I think a lot of seed money has gone in, a lot of scale up money has gone in earlier as well. So companies have had the ability to raise capital and create some wonderful companies. And that allows us for the opportunity for us to actually invest in some of the companies that have emerged as successful leaders in their space, and then need further capital to continue to scale up nationally and eventually go public. And we think we're well suited for that because we've done a lot of the work in terms of taking lots of different companies public in India. I think we're well suited for that.
So is it a conscious call then to maybe exit some of the traditional IT players like Infosys, KPIT, etc., and look at more tech players that are disrupting a lot more, adapting to new technology?
Sure. So I think in IT, enterprise tech, as we call it now as a sector, we look at various things. Of course, IT services is a phenomenal story out of India, right? Just to put it in perspective, when we started investing in ChrysCapital in India, the exports that year out of India were less than $1 billion. I think this year is north of 250 billion, I think 260 to $270 billion of exports. So it's been a phenomenal scale up. I think world-class companies have gotten created out of India. The size and scale that has happened in IT, I think is not witnessed anywhere else, in Indian economy, right? From a global relevance point of view, over a 30% global market share is just phenomenal. And so I think the space is still very large and provide and there is enough opportunity for companies to keep coming on. Of course, we're going through a little bit of a slowdown period right now, as you've seen, and therefore, it's linked to the U.S. economy predominantly because that's where we majority of our exports are as a country, and that's also a function of what kind of services are getting exported, legacy versus new age and modern that you're talking about. And I think all these companies are sort of shifting, based from new age, from legacy towards newer age, cloud technologies, etc., from a services lens. And that process is painful and takes a while, coupled with the recessionary trends. I wouldn't say recession, but recessionary trends in the US, where particularly BFSI has been the largest vertical outsourcing to India. And that had, issues last year with a number of the banks in the US having, solvency issues, etc., that were put up to questions. Clearly, outsourcing was one of the things that got, slowed down as a result of that. And so it is seeing some challenges in growth, which is clearly visible in the listed companies and our portfolio in general across other companies that you look at. But I think the long-term trends of being, very high return capital, and having a large market to swim in, the availability of talent, all of that exists. I think it's finding the right niche of technologies, right services, that can actually come in, which is fit into the new age, paradigm a lot more, and therefore can continue to scale. I think that is the key here. And if you get that right, I think you'll end up making, a decent runway for returns.
So Lenskart, for instance, these are a lot of companies that you've invested in that will be going in for IPOs. Wanted to get in your thoughts as to at what stage ChrysCapital invests in the startups. What is the contribution post-listing? Have you had a look at some of the valuations that these companies command? What has been your view?
Sure. I think, look, from our lens, we have sort of very deep relationships with companies that we invest in, right? I think that's just something that we endeavor to build in. We see ourselves as long-term, partners with management and promoters. And I think that's really, something that we've endeavored to build from the get-go in our minority deals. In our control deals is different because then you start to partner with, managements in a different way, trying to build businesses. And like I mentioned, about now more than 50% of our business is controlled. But in minority situations where we are backing promoters, entrepreneurs, founders who own majority of the companies, we've been very fortunate to find and back with some of the best entrepreneurs out of India. AU Finance, I think Mankind. You think about some of the companies that have gone public, have done really, really well and continue to scale their businesses to become multi-billion-dollar businesses. Mankind is a great example. We invested, I think, in 2006 and went public now, and we've had several iterations and investments through different funds, etc., with them, and the relationship continues to be very, very strong. And we just recently exited here, so even post going public, I think the engagement with the founders as well as with the teams is reasonably strong. We try to do that in the purview of whatever is possible in a listed company. Of course, those things change. Your board seats typically drop off, but your relationships do continue, and I think that we continue to sort of add value to the company in using those relationships and sort of seeing what role we can continue to play, whether it's benchmarking, whether it's even sometimes running. I would say one of the lessons we've learned actually through our control deals is we've developed the muscles of actually making, running projects in companies, improving metrics, etc. And I think we're able to translate that even to our minority situations because that muscle is built now, and we're able to, entrepreneurs find value in, taking advantage of that, that capability that ChrysCapital has built and offering it to them. So we have something called Enhancin, which is, an in-house consulting group of people who actually run projects inside companies. We do a lot of that in the control deals group, but even, I would say, even outside of that, in minority companies, we found great success of how we've engaged with promoters and entrepreneurs. And so we run specific projects outside of Enhancing Group as well. The deal team would also sometimes get involved in acquisitions and sort of maybe integration aspects, supply chain issues, etc. So it's actually very rewarding, experience in terms of building out a company. And I think we try to work in areas where we genuinely can add value. There are areas where we can't, and we be very upfront about we say, okay, these are the areas we really can work on, and we find alignment with entrepreneurs to work on those areas.
You know, in over 2 decades, the firm has generated $6.5 billion in returns. There have been 80 plus exits. Going down the line, which are some of the most interesting and promising sectors?
I think, for us, frankly, having a consistent strategy is much more important. I think these things don't change, on a, every 6 months or every year or so. Every once in a while, obviously, there will be over 4, 5, 7 years, 10 years, new sectors that emerge, new, themes that keep coming in. But for us, it's really more of the same, right? We look at pharma healthcare quite deeply, including health tech that we talked about. We look at enterprise tech. I think within enterprise tech, the new thing that we've done is started investing in SaaS businesses. I think we did one, last year, a company called ProHands. We're looking at other such situations as well. So it's not just services, but SaaS-based services, which could be quite interesting. In consumer, obviously, there are a whole bunch of different angles. I think consumer has also been relatively slow in India, although the opportunity is very large. As India gets richer, the consumption palette will change quite a bit. But for now, we're seeing sort of decent growth only in a few subsectors. Even QSR, for example, has had a challenging last year or so. And so growth has been a challenge in consumer in general across the board, I would say. We are finding, new niches, in manufacturing, I would say light, consumer, if you would, light manufacturing, high return capital, building materials businesses. They've also had a tougher period in the last year, but sort of coming out of it now because real estate has done well in India. And eventually, I think building materials as a segment will do well on the back of that. So those are just broad thoughts. Financial services, of course, financial inclusion, we covered that earlier as well. As India grows, I think financials are a derivative play of the economy. And we're very optimistic on growth on those segments. There are underpenetrated categories like health insurance, like, I would say, rural, rural inclusion-led businesses, consumer finance related to those aspects, which I think can continue to go. Education finance, for example, Credila we've backed in, which is global, but also Varthana, which does more local. I think education is a big aspect, and Indians really spend money on education, and financing of that can be a big opportunity. So I would say those are some niches that we've targeted from time to time. The new economy also, you do come across businesses that continue to grow. Lenskart, for example, right, is no longer a new business, but there are a lot of such businesses, brands that are becoming profitable and that promise great growth in the future. So those will be segments that we'll continue to be excited about.
Sanjay, good to have you on board. Thank you so very much for taking the time out. Time for a very short break. Don't go anywhere.